Yes, they reported yesterday, and the stock was down on the report. It's interesting to listen to the CEO. He was speaking our language. He essentially said to investors, we are playing in a massive space here, and we're going to invest aggressively now in order to capitalize on the exponential changes that are taking place here. So if you are short-term in your focus, you probably don't want to spend too much time investing in Palantir.
Cathie Wood has long been very vocal about her investment philosophy, leaning heavily on long-term growth and disruptive technologies. And Palantir Technologies recently witnessed a significant surge in its stock performance, reflecting the broader trends in the tech market. Today, let's talk about the numbers and strategies as we explore why Cathie Wood doubled down on her investment in Palantir. How might this move impact the trajectory of both Wood's portfolio and Palantir's future?
And we do believe more and more companies are going to start behaving in this way instead of catering to short-term time horizons and we would say, in some cases, short-sighted shareholders who are much more interested in profits now, dividends now, share repurchases now, than they are in a company investing aggressively, foregoing short-term profitability in order to really to catch some very big waves out there. So I'm astonished. Their revenues are still 61% government, but I've learned, and I think most people in the innovation space have learned over time, that some of the most important innovations in our lifetimes have started in the government.
Palantir Technologies has been heavily invested in artificial intelligence, strategically positioning itself as a key player in this dynamic sector. Recently, the company has directed its focus towards AI, recognizing its massive potential and growth opportunities. Introducing Palantir's artificial intelligence platform, the company has unveiled a groundbreaking initiative that holds significant importance in the evolving landscape of AI technologies. AIP is not just a mere addition to Palantir's portfolio, but a pivotal advancement, showcasing the company's commitment to innovation and technological prowess. What sets Palantir apart is its unique approach to AI, distinctly emphasizing long-term growth objectives over immediate profit gains. In a tech landscape often driven by short-term financial goals, Palantir's strategy diverges by prioritizing sustained and substantial growth. This approach positions the company to harness the full potential of AI advancements, laying the groundwork for a robust and enduring presence in the industry. Now, let's dive into some real data and statistics to shed light on Palantir's foray into AI. The company's investment in the artificial intelligence platform has translated into tangible results. As per recent financial reports, Palantir's commitment to AI has contributed to a steady increase in its commercial revenue. This data underscores the practical impact of Palantir's AI strategy on its financial performance. Furthermore, Palantir's emphasis on long-term growth aligns with the evolving nature of AI technologies. Unlike short-sighted approaches that may yield immediate gains but lack sustainability, Palantir's strategic vision positions it as a contender for enduring success in the ever-changing AI landscape. Now, what really drove ARK Invest to increase its stake in Palantir amid the recent dip in the stock? Let's dissect the specifics. The rationale behind this move lies in the long-term investment strategy that Cathie Wood and ARK Invest have consistently championed. Cathie Wood, known for a forward-thinking approach, aligns her investment strategy with Palantir's commitment to long-term growth over short-term fluctuations. Recent market downturns did not deter ARK Invest, but presented an opportune moment to accumulate Palantir shares. Wood's strategic vision involves identifying companies with robust fundamentals and visionary leadership, and Palantir ticks those boxes. Let's look at the recent financial disclosures to delve into real data. ARK Innovation ETF bought a staggering 777,143 shares of Palantir when the stock experienced a decline. ARK Next Generation Internet ETF and ARK Fintech Innovation ETF followed suit, adding 153,662 and 100,802 shares, respectively. This move demonstrates ARK Invest's confidence in Palantir's future growth potential. Beyond the numbers, positive signals from Palantir's CEO, Alex Karp, have further reinforced ARK Invest's position. Karp's messaging revolves around an aggressive investment approach to capitalize on exponential changes in the tech landscape. This aligns seamlessly with Cathie Wood's long-term perspective, as both share a conviction in the transformative power of sustained investment in groundbreaking technologies. Palantir's Q3 2023 results also tell a compelling story, particularly with a 23% surge in commercial revenue. This isn't just a statistical uptick, but a tangible manifestation of Palantir's strategic maneuvers in the business world. Diving into the financials, Palantir's robust Q3 performance showcased a commendable increase in commercial revenue. The 23% uptick highlights the efficacy of the company's initiatives, illustrating its capacity to generate revenue beyond government contracts. But what's particularly intriguing is Palantir's innovative lead generation strategy. The company has ventured into hosting boot camps for potential customers, a creative approach to showcasing its various software platforms.
Yeah, so these boot camps, we've rebuilt our entire go-to-market around it because it's really this magical experience where you get your hands on the keyboard for 8 hours and you leave that experience with a production-ready use case. And with even more than that, a deep and intuitive understanding of how do you apply this technology to get real results. More than a proof of concept, actual proof that you can take to your enterprise and get results. And so this has been a profound change for us. And we ended November, we thought we'd do 140, we did it for 200 organizations. We're on track this year to serve 325 organizations with boot camps. And we've really focused on commercial so far this year, particularly focused on US commercial. Next year and into December here, we're really gonna be bringing this to the US government as well.
These immersive seminars serve as a platform for prospective clients to test and demo Palantir's products, providing a first-hand experience of their value. By allowing potential clients to demo its products, Palantir strategically positions itself to cross-sell and upsell its offerings as these leads convert into paying customers. Beyond the innovative strategies, Palantir is actively working to diversify its revenue sources, recognizing the importance of not being solely dependent on government contracts. But before we continue, we just want to thank you for watching this far. Now, let's compare notes on Jefferies analyst Brent Thill's recent actions concerning Palantir. Thill downgraded the stock from neutral to underperform and concurrently slashed the price target from $18 to $13, indicating a projected 19% downside from current levels. This move stems from Thill's perspective that Palantir has ridden the AI fervor to unsustainable highs without a credible monetization strategy, coupled with a perceived slow recovery in demand for its commercial and government businesses in 2024. Meanwhile, Thill's downgrade implies a cautious stance, expressing concerns over the stock's supposedly unsustainable levels and the perceived lack of a clear path for monetization. On the other hand, ARK Invest sees an opportunity for substantial gains, considering the stock's dip as a chance to accumulate more shares. Analyzing these perspectives brings to light the contrasting views regarding Palantir within the investment community. Thill's concerns highlight skepticism about the current valuation and business strategies, while ARK Invest's move signifies a belief in the company's long-term potential, even during periods of stock volatility. What about Palantir's financial health? Well, it's been on a robust streak, boasting 4 consecutive quarters of GAAP profits. This isn't just a fleeting accomplishment, but a testament to the company's sustained profitability. Now, let's zoom in on Palantir's eligibility for the S&P 500. The 4 consecutive quarters of GAAP profits are a key factor here. This financial milestone positions Palantir as a contender for inclusion in the prestigious index. The company's ability to consistently generate profits aligns with the criteria set for S&P 500 eligibility, hinting at a potential milestone in Palantir's trajectory. But that's not all. Let's delve into Palantir's adjusted free cash flow. As of September 30th, Palantir's trailing 12-month adjusted free cash flow stands at $501.5 million. This figure isn't just a standalone number. It measures the company's financial prowess, reflecting its ability to generate cash after accounting for operating expenses and capital expenditures. To put this into perspective, let's compare Palantir's adjusted free cash flow with that of other prominent tech players. Apple had a free cash flow margin of 26% in its latest quarter. Palantir's margin was 24% in the same period, bringing it near one of the industry giants. This comparison underscores Palantir's financial resilience and places it in the league of well-established tech companies.
Sure, most of the stocks in our portfolios are there because we've used an AI lens. Now, we wrote a paper called Investing in Artificial Intelligence, Where Will Equity Value Surface? It's on arc-funds.com. I think many people feel comfortable. They're on the right horses, the mega cap tech companies.
More on AI. Cathie Wood and ARK Invest are uncovering the intricacies of Palantir's artificial intelligence roadmap, honing in on the significance of the Palantir Artificial Intelligence Platform. Now, let's shift gears to Palantir's customer growth rates. This isn't just about numbers on a spreadsheet, but a critical aspect with potential ramifications on financial performance. Palantir's expanding customer base signifies a growing clientele and a pathway to increased revenue, underscoring the practical impact of strategic decisions on the bottom line. Looking ahead, Palantir is not just eyeing growth, it's preparing for exponential expansion. The strategic initiatives in place point towards a trajectory that isn't just optimistic, but a proactive approach to harnessing the potential for significant growth in the coming years. Now, let's dissect Palantir's price-to-sales multiple. This isn't just about financial ratios, it's a comparative analysis against other high-growth software businesses. Palantir's position in this landscape is noteworthy, providing insights into its valuation and standing among its peers. Speaking of valuation, Palantir is presenting an attractive opportunity, trading below its all-time highs. This isn't just a market observation, it's a cue for potential investors, indicating a window to enter the market at a point where growth potential may not be fully reflected in the stock price. Zooming out, Palantir isn't just another player in the AI landscape, it's carving a unique niche. The confluence of strategic initiatives, customer growth, and an attractive valuation sets Palantir apart, making it a distinctive investment opportunity in the broader AI landscape. In a dynamic AI landscape where strategic moves shape the future, could Palantir's unique positioning be the key to unlocking hidden potential? What do you think? Drop your thoughts in the comment section down below. Moreover, if you want to know about investing in Palantir, simply tap on this video link. Appreciate you joining us, and keep an eye out for more thrilling content coming your way.